Hi everyone, it's Nick here from TraderLion. Today we're going to be covering the double bottom, specifically the Shakeout +3, which is an early entry technique originated from Jesse Livermore. So let's get started. So what is the double bottom pattern? The pattern involves two lows with the second low undercutting the first. The pattern must be a minimum of 7 weeks to be considered a double bottom pattern, and a double bottom pattern is a continuation pattern. So what is the Shakeout +3? As we mentioned before, it originates from Jesse Livermore. An entry point is presented when it rises a certain amount of points above the first low on strong volume, and there are no set rules. A general rule of thumb is 10% off of the first low to a max of 6 points. The Shakeout +3 is you're looking for 3 points off of the first low, so you want it to move $3. However, when you get into higher price stocks, there's no hard rule, but you do want to adjust that number to a max of $6. If I'm trading a $30 stock, I'm going to use the Shakeout +3. If I'm trading a $100 stock, I'm going to use the Shakeout +6. So here is the Shakeout +3 pattern. See, we're in a prior uptrend. It's a continuation, and then it comes down and makes its first low, starts to move back up, and then it undercuts the first low, makes a new one, and then starts to move up. The official breakout for the double bottom would not be until you break this point right here. So the Shakeout +3 gives you a much better entry. Let's take a look at two examples. The first one is DPZ, Domino's Pizza. Domino's Pizza came down, made its first low at 175.80, moved back up, undercut that low and made a new one at 166.74, and then starts to move up. So we're looking here, and the entry point is technically not until 211, but with the Shakeout +3, where we're going to use +6 in this instant because it's a higher price stock. So you do 175.80 plus 6, which is going to bring you around 181. So your entry would be 181 instead of 211, and that's getting you in $30 earlier. So very, very powerful early entry technique to know. If you would have bought at 211, it moved up to 221, came back into 198. So that may have triggered your stops depending on where they were, or you're now setting negative on the position. The early entry, you're in from down here, 181, and so you are still plenty profitable on this pullback. So last up, let's look at a chart of WB. WB, we played this one back in November. So we came up, made a high of 108.30, made a low of 93.94, back up, undercut that low, 89.30, and so now we're going to use the +6 on this because it's a higher price stock. So we do 94 plus 6, which brings us to 100. So we bought this at 100 over here, and you can see how powerful of a move it was. Double bottoms are very powerful patterns, and they result in big moves when they work correctly. So we could see we did get up to 123, and it did end up pulling back. So although it pulled back, made new highs, with the early entry technique, you're just sitting under even if you didn't take profits here. If you would have bought at 105.50, you would be a lot more in the red during this pullback. So the double bottom, it's a continuation pattern, and the second low always has to undercut the first low. This is the Shakeout. And so Jesse Livermore Shakeout +3 or Shakeout +6 is just a way to get into these patterns early. When you move off of the first low after undercutting it, at least 3 points or 6 points, depending on the price of the stock, it shows that the demand is there after it's been shaken out and it's ready to move up. So very, very powerful technique. I hope this video was helpful. If anybody has any questions, please don't hesitate to ask. We will respond to all of them. We'll be covering more chart patterns later in the week, but this has to be my favorite pattern and my favorite early entry technique. That's it for the double bottom video. Have a great rest of your night, and I will see you in the next video.